Welcome back, all you cool cats. Tonight's episode's going to be extra special because I'm having surgery in 2 days and I probably won't be recording for 2 weeks. So tonight we are going over SPY, QQQ, TLT, Dixie, and all the Mag 7 and more. So if you would like to wish me well, please show your support by liking, sharing with somebody that you think will enjoy these videos, subscribe, and tap that notification bell so you won't miss the next video when it does come out. Last Thursday, I opened QQQ puts because we were touching this main resistance line, and I thought for sure we were going to have a sell-off. You got to zoom way out to see it, but this yellow line is this very long-running main support line, and we were touching it. But as you know, we hovered around it all in after hours and pre-market. We had a bit of a dip, but I want to show you the confluence that I was seeing that made me think it was a good idea to even go short that day. When we take a look at the ADD on the 6th, on that Thursday, we could see we had this rising wedge pattern that was actually kind of deriving out of the symmetrical triangle pattern that we had before the election. And so I thought for sure that this was probably likely to break down, and it did. We had a bit of a pretty strong pullback in pre-market, but that's all that we got for now. I'm still of the very strong opinion that this is essentially, we are seeing a blow off top. Look at the RSI on the 2-hour time frame for the ADD. I do believe that once the strength on the RSI gets below this support line, we're going to see some sell off in the market. One of the other main reasons that I decided to go short QQQ last Thursday is that SPY was, at the time, it was below this main resistance line. And I knew that if we broke above that, there's also this other main resistance line here. Let's zoom out. I know there's a lot going on this chart, but this orange support line, once we got below it, it should have acted as resistance. And look at this on the daily time frame, even though we peaked above it, we actually did close back below it, possibly confirming it as resistance. And even though I wasn't expecting this main resistance line here to get broken above, because you can see how significant it is and how long running it is, it still is this resistance zone. So in this video, I'm going to give completely updated longer term and potentially short term targets for all kinds of different charts, just in case I'm not able to make an updated video for a couple of weeks. So as I covered before, on QQQ, we had this giant cup and handle pattern on the weekly time frame, and that was targeting somewhere around like 526, maybe 530. And as you can see, we're getting pretty close to that. We're also revisiting this symmetrical triangle that we went over a few episodes before. Remember how I said that this resistance line that appeared to have formed looked like it may have been forming a rising wedge with this lower support line, but that's been invalidated now. So it really kind of looks like potentially the symmetrical triangle is still back on the table. If it is, the upside target for that symmetrical triangle is somewhere around, let's say 550, because that's a good psychological key area. However, we're not out of the woods yet. We still have this very long-running, very strong overhead resistance. So if this were to turn out to be actually a false breakout of a rising wedge, if we take this pattern target over and let's say that we actually do start to get a sell-off soon, basically from this area, our first target would be somewhere around like 460. Our second target, if we bring this over here, would be somewhere around 442. And we've got to zoom out a little bit more to see it. But our third target, which is basically the breakdown target for the entire massive rising wedge, if we bring it up here, that target would be somewhere around 420, which would put it right into this big demand zone. And some people want to try to call me a perma-bear. I'm not a perma-bear. I just try to follow the charts. Sometimes I get the sentiment wrong, but there is just so much of confluence of the market potentially selling off at some point. We've got this. This is on the weekly time frame. Huge bearish divergence here. One could potentially argue that this is just forming a giant symmetrical triangle, but considering how overvalued the overall market is, it just seems more likely that it's going to want to go down once it fulfills these pattern targets. And I just feel like it would be stupid not to mention the uninversion of the yield curve, the SOM rule being triggered, the fact that our current government is going roughly $1 trillion in debt every 100 days just to stay afloat, and we're not even in a WAR. When you look under the hood at the jobs numbers, they're actually really not looking good, and we saw how bad the last one was. I legitimately could make an entire video just on how likely it is that we are heading into recession, and some have already said that we are already in recession. So let's cover the upside and the downside targets on SPY. As we discussed in a previous video, the giant cup and handle pattern, that pattern target was basically around 575. It has already been met. Now, this symmetrical triangle, possibly ascending triangle, depends on how you want to look at it. The upside target for that is somewhere around 620 for SPY. But I want to reiterate the same thing on SPY. SPY still has bearish structure overhead. Both of these overlapping, long-running, previous support or resistance lines. Remember, once you get underneath one of them, they flip to resistance typically. We are below all of this right now. So SPY, technically speaking, could come all the way up to like 613, 614 if it were to break above this resistance line. But let's just say that we don't break out above this and that this actually confirms as resistance as we typically would expect it to be. Where would those targets be? Our first target right now, if we draw this up here, would be somewhere around like 560. Our second target as we bring that up here would be somewhere around like 550, which actually would place it confluent with this long running support line here. And our last and final, this is if the main rising wedge pattern actually broke down, this would be targeting somewhere around 524, 525. Keep in mind that pattern targets can overshoot, and this is just the minimum target for either of these patterns. We're about to revisit this pattern that I covered on the VIX in the last video, but I'm really interested in hearing what you all think. Do you think we're headed towards a major recession, or are the perma bears crazy and we are just going to new all-time highs every week? As I shared before, if we draw an imaginary line here, is this as resistance and this was support, and we took a measured move. I said that the VIX was very likely to either go up to around 31, which was a key level, or all the way down to basically around 12, which actually, if you zoom out just a little bit further, is another key level. This is this main support area. Every time we've hit that, we've bounced. And so even though I thought it was more likely that this was going to break to the upside, once we had a decisive Trump victory, obviously it was off to the races with the market and they just could not get enough. So far, the VIX has come down to around 1460. Now, I do think there's a potential that we get a bounce here. But if this pattern actually plays out, then we will continue to see the VIX crush. As I like to do, I shared on the community tab throughout the week that we had this falling wedge on the VIX that was indicating at least a counter trend move on fear. And these are the kind of coiling patterns that if you can identify them quickly and catch the initial breakout, you can make your entire week. Now we've got to take a look at the Dixie. Dixie can go up for a lot of reasons. If you have a strong economy, if there's a lot of demand, like foreign demand for US equities. But alternatively, people move into cash whenever they're getting a little bit scared. And sometimes it's not always easy to determine why the dollar strength is going up. But what we do know is that right now, the dollar is basically right underneath this main resistance line that we covered before. Yeah, I know it's a mess, but look at this. Every single time it hit this line, it touched, came up, touched again, basically double top, shot way down. Came up, touched, shot down again. Touched, shot way down. Right now, if this acts as very strong resistance, which we always treat resistance as resistance until proven otherwise. If this acts as resistance, and we can see the RSI in the weekly is already in a very overbought condition, it's a lot more likely that this will act as resistance and the dollar will start to come back down again. But there's obviously no guarantee of that. And if we look at this, look on the RSI, we have a bit of a coiling pattern, a bit of a symmetrical triangle that is forming. And we can see it here too. You know, if we actually draw in these trend lines, we can see that the Dixie is forming the symmetrical triangle. Now, which way is it going to break out? We won't know until it actually happens. Typically, if you're under resistance, you would expect it to break down, but the dollar could break out. And I keep keeping in the back of my mind the yen carry trade. People just piled right back into that sucker. So if we start to see the yen weakening and Japan is forced to step in again, at the same time where Dixie's at this main resistance line, we could potentially see a rapidly weakening dollar and a rapidly strengthening yen, and basically a repeat of August 5th. Now, what does this mean for long bonds, aka TLT? I'm glad you asked. First off, I just want to point out, because I find this really awesome, that I pointed out this giant falling wedge. I said that TLT was likely to break out right around this support level right after the election. And look, that's exactly what it did. And we can see that the breakout target here, it was right around 93. And we're pretty close to that already, which this whole area here is resistance. So ultimately, what does all this mean? If Dixie decides that it wants to break above that resistance line, it typically has an inverse correlation with TLT. So I think if Dixie shows a lot of strength, TLT is actually going to pull back. Alternatively, if Dixie decides it wants to break back down from that resistance, I think we're going to see a moonshot for TLT. Of course, you have to keep in mind just how much our government is currently borrowing, and I think other countries are starting to take notice of that, which could absolutely cause yields to go back up. But at least in the short term right now, TLT would have to get above this main line here around 93. If it can't get above it, we're definitely going to get a pullback. If it can get above that, then it's going to have to break back above this previous main support, ascending support line. It's going to have to break back above that. And of course, that moves up as the days go by. Alternatively, if TLT were to pull back, we have this previous resistance. It acted as support for a while. That would have it coming back down to around 91. And there is the very real possibility that we end up with almost like a megaphone pattern where we're bouncing between these supports and resistances until we finally break one. And if you missed this in my last video, I'm just throwing up the Ichimoku cloud. This is the resistance on the monthly time frame for long bonds. There is a crap ton of resistance against bonds. So you can look at it either way. One way is if we can push through this resistance, you'll have a massive short squeeze on bonds. Alternatively, if you can't get above that, it's going to pull back, and it's going to pull back sharply. All right, we're about to cover all of the Mag 7. But before we do, I just want to say I'm very thankful for all of my viewers and all of your support. And to also say that it may not seem like it, these little 10-15 minute videos, but I put about 4 or 5 hours into each one of these videos. I do a ton of analysis and I try to make it the best for you that I can. So even just something as simple as tapping that like button or hitting subscribe goes a long way in showing support. And it helps me to know that I'm providing content that you all enjoy. So, NVIDIA, the leader of the pack. We saw on Friday how we hit this main long-standing resistance line. Again, every single time I show it, I have to zoom way, way out to even show you this. How far back that goes. Look how far back you have to drag to even see that. But as you can see, NVIDIA is kind of in this wedge right now. I covered before the symmetrical triangle pattern and that the breakout target for that, if it actually goes all the way up there, is around 170. But NVIDIA would absolutely have to get above this main resistance line. If it can't, and if this giant rising wedge actually finally plays out, when we take this measured move, now this is on log scale, and we move it over to here from the breakout, this is indicating that if this were to break down from this main support line here, that NVIDIA would be targeting somewhere around $70 a share. And it doesn't take a rocket scientist to see this bearish divergence that has been forming on the weekly time frame on the RSI for NVIDIA. But alternatively, some people could actually look at this as a bit of a falling wedge, even on the RSI, which in that case would actually indicate that NVIDIA wants to go even higher. So for right now, I think the real thing to watch is these two yellow lines, this one and that one there. It's basically bouncing around in there, and I think it's either going to come up to the upper part here. We could potentially, again, this is confluent with that symmetrical triangle pattern. So we could see NVIDIA come all the way up here around like 170, Alternatively, if it breaks this, I think the next major support would be this main support line here. And we could see NVIDIA come all the way down to about like 116. And those would be your slightly shorter term targets. So we're taking a look at Meta, and I want you to pay close attention to this parallel ascending channel. We went up and down within it for many, many weeks. But right now you can see we're actually below it, and until we can break back above it and make a new all-time high, we are now below resistance. And I think on a very long time frame, like on the monthly time frame, what we are seeing in my mind indicates that we are actually losing steam. We're losing momentum on Meta. And so that you know, I do have an alternate reason for showing you all these charts, even if there aren't clear patterns of where something is going next. I want you to see these main support and resistance lines. So if you'd like to, you can add them to your own charts. Taking a look at Microsoft, we previously covered this giant rising wedge, and we said that the breakdown target would eventually be somewhere around 340. But when we zoom in a little bit more, what we see is this long period of consolidation in between this supply and demand zone. And we can also see this confirmed on the RSI. It's forming this symmetrical triangle. And I'm not quite sure if this is standard technical analysis, but if we take a measured move from the top of the supply zone and the bottom of the demand zone, and we move it up here and down, it gets us targets of potentially, if this breaks out of supply, we could see this coming all the way up and touching the underside of this previous support line somewhere around 484. But if it breaks to the downside, we could expect a target of somewhere around 359. And I always keep in mind when I throw out these targets, a lot of times the markets likes to move to key levels of like multiples of 5 and 10. So if I say 359, probably just shoot for 360. Taking a look at Tesla, and I want to go back over this because I'm kind of proud of this. And it's so amazing to me how these technicals actually work. So I had covered previously this symmetrical triangle pattern, and I said the measured move was right here. And we had this false breakdown initially, and I said it was very likely that from this bottoming, we were going to meet this pattern target. Look at this. I said about 264, drag over. 264, and that right there is where we actually got a pretty sharp pullback. When I zoom in on the 4-hour time frame, we can see this ascending triangle here, and the pattern target for that is right around 338. Right now we're out right around 329, so we're actually pretty close to that target right now. And targets can overshoot, but a lot of times once you meet your target, what you've really done is you've met that area of liquidity and you get a pretty sharp pullback. Now that said, it would be kind of hard for me to not say that the chart of Tesla is looking bullish long term. This is on a weekly time frame. This was that symmetrical triangle that we covered before. When we look at the RSI pattern, we've got a basing pattern. We're expecting, once this completes, I'm expecting a pretty sharp pullback to retest previous support. However, this symmetrical triangle pattern eventually is targeting somewhere around 466 to 470 to the upside. And of course, with technical analysis, it's all probability. Nothing is set in stone, but that seems to be what the charts are indicating. Looking at the chart of Apple, I once had a trader tell me that my charts were beautiful, right before she blocked me. She didn't like my bearish stance. So if you think my charts are beautiful, please let me know in the comments below. When we look at the chart of Apple, we got a lot of things going on. This was that long running support line that we've covered before. And obviously, every time that we touched it, we bounced very sharply. However, ever since we broke below it back in March of 2024, we've got a little bit of something else going on. So if we draw these parallel lines here, and here, it looks like it's not a perfect parallel channel, but we've got a bit of a channel going on. So we could potentially see Apple come in all the way up, break the previous all-time highs, come all the way up to around 252, 253 before we even got a really sharp pullback. Alternatively, if Apple wanted to break this main support line and fall back down, we could see it come back down and retest this main area here right around 200 even, and potentially come all the way down to even around 189, 187, give or take in that area. And again, maybe I'm just a little bit too biased, but we can see for years, Apple kind of stayed in its lane. It stayed in this well-defined channel, and it got very exuberant. It broke out above that channel, came back, retested it. But it seems like each subsequent bounce is just having a little bit less pep in its step. And not only does the angle of all of this look pretty sharp, kind of like a rising wedge, but when we look, this is on the weekly time frame, when we look at the RSI, we have bearish divergence forming here. So again, long term, my money is on Apple actually going back to the downside. We're just losing demand. When you can barely buy McDonald's, why in the world are you going to go out and spend $2,000 on a brand new phone that doesn't even have full AI capabilities? Not to mention, they keep having all this competition with China. As I shared before, once Amazon had broken below this main support line and leading all the way up into August 5th, it actually had already fulfilled its pattern target for this giant rising wedge. So right now, Amazon's kind of doing its own thing. So what I've noted is we have this long running support line, we have this long running resistance line, and Amazon appears to be kind of in this channel right now. So it's obviously in blue sky territory. I think there's the potential. We can see right here we had this symmetrical triangle pattern that I covered, and the target breakout for that was right around 210. And as you can see, we overshot it just a little bit and then got a pretty good pullback. So of course it's yet to be seen, but there's a potential that Amazon could come all the way up to somewhere around 232, 233 and hit this main previous support, now potentially resistance line, and then pull back. Or we could come back, we could retest previous all-time highs, we could come down to the support line somewhere around 190, 192. I think the likelihood is that Amazon is actually going to pull back and retest this. Who knows if it'll refill this entire fair value gap? Who knows? But now that we've met this pattern target, it absolutely could start pulling back. All right, and last but certainly not least, we're looking at Google. We've covered before this giant rising wedge pattern. That pattern target there is targeting about a 30-point move to the downside if this main support line ever breaks and confirms as new resistance. But for now, I think all eyes should be on this ascending channel here that's in blue. We can see we had multiple touch points. Every time we touched this acted as support. We touched here, it acted as resistance. So I think personally, if Google could get up to somewhere around 187, 188, right at the top of this main resistance line, or if it were to come back down and touch around 169 to 170, those would be key areas where you either want to short or go long. In my mind, this is a pretty well-defined channel, and channels are how we make really good money. And while we're on the topic of making money, I think I should mention that nothing I say in any of my videos should be considered financial advice. Please consult a financial advisor and do your own DD. And this wouldn't be a complete analysis without taking a look at Bitcoin. So as I shared in the last video, I said that this falling wedge on Bitcoin was indicating that it wanted to go up to about 76,000. We can see that it did. It wicked back down and then pushed all the way up. But if I were trading Bitcoin, I would definitely exercise caution here because we are at the upper resistance of this ascending channel. So could Bitcoin break out above it? Yeah, it absolutely could. It could even come back up here and double top. But I think it's more likely that it's going to reject off of this, come back down a little bit, probably retest previous support, maybe around 74, 75,000, and then it could continue a little bit higher first. But obviously, at least for now, I think the main thing to keep in mind is that Bitcoin is in an ascending channel. It's a pretty sharp ascending channel. And until proven otherwise, until we break this channel, Bitcoin is on the trajectory to go up. And we could see it come all the way up at the top of this channel around 88 to 89,000 before even seeing a really truly sharp pullback. Of course, I mean, Bitcoin is considered a risk on asset. So if the overall markets were to start to turn over and potentially price in a recession, I think Bitcoin would follow. Taking a look at the investing.com economic calendar, I've got this dialed in to just the most important catalysts of the week. On Wednesday, of course, we've got the CPI that's coming out. That will probably be a big market mover. On Thursday, we've got PPI. It tends to move the market a little bit, but not as much as CPI. But of course, as Fed Chair Powell is speaking, that could move the markets. if he's dropping any hints as to upcoming monetary policy. And I like to leave Japan's economic catalysts in there too. If they have a strong GDP, they'd be more likely to be able to continue to raise their interest rates. And of course, since the Japanese yen is part of the Dixie, a stronger Japanese yen means a weaker US dollar, which of course could unwind the Japanese yen carry trade. And going over Moomoo's earnings calendar, on Monday, we really don't have a whole lot going on. Of course, on Tuesday, we've got Home Depot, AstraZeneca, Shopify, Spotify. We've got Tencent and Cisco out on Wednesday. On Thursday, we've got Disney, because that's a pretty big one. And then, of course, for the Chinese names, we've got Baba giving earnings pre-market on Friday. Then the following week, we've got Eurozone CPI coming out, which that is important because it could affect the strength of the dollar. Then on Thursday, we got the Philadelphia Fed Manufacturing Index and existing home sales. Probably won't be very big market moving. Friday, we've got S&P Global US Manufacturing PMI, but nothing too big in the way of economic catalysts. And of course, also the following week, on Monday, we'll have Xiaomi that's reporting. On Tuesday, we've got some heavy hitters. We've got Walmart pre-market, Lowe's pre-market. Quite possibly the most market moving will be NVDA post-market on Wednesday. And considering everything we've seen going on with super microcomputer, it's kind of indicating that maybe AI demand has not been as strong as people keep saying it is. And considering NVIDIA has actually been involved in fraud twice before, kind of makes me wonder if this next earnings could potentially be a sell the news event. Of course, we've also got TJ Maxx coming out, Palo Alto, Target, Snow. On Thursday, we've got Intuit, Deere, Baidu, and nothing really special on Friday. And I'm about to share this week's trading rule to live by, but before I do, I want to wish all y'all cool cats a great week. Stay safe, trade safe, God bless. And if you don't care to say a little prayer for me in my surgery, I would really appreciate it.